Hey guys, welcome to month 5 of the Road to 100k funded series with the 5%ers. I can't believe that we're on month 5 already, that's crazy. So this trading month was July, and in July I took 3 trades, which I'm really excited to talk to you about. The markets have actually been shaping up pretty nicely in July, and it's a shame because I did miss a pretty big winning trade, which we'll talk about in this video. I really enjoy trading with the fivers. I've been trading with them for years, so I feel really comfortable recommending them to you guys. If you're looking for a prop firm and you don't know who to choose the fivers. I'll put a link below. Okay, let's get into the fun stuff and take a look at the charts. Come on. I just want to take a moment. For anyone that's been watching this whole series from the beginning, I really appreciate it. Thank you so much for following along. It means a lot to me. So yeah, let's look at this first trade, which was a continuation I took on NJ. And I think I graded this trade a 9 out of 10, so a pretty good trade. Now, this is quite an unusual one, and I don't know if everyone took it because prior price action is looking very flat and very range bound, which would have put a lot of people off. And I agree, I can see the logic, but I can see something within the range here that makes the trade quite high probability in my opinion. But before we talk about prior price action any further, let's actually take a look at the entry itself, which is pretty much perfect. So we had this really big impulse. Well, we had the impulse, one of the impulsive candles is actually inside the range. Overall, I would say that this is a good amount of momentum on this pair. The pullback candle is with the trend. It's a single candle pullback, so that also really makes the trade more high probability. And the breaking candles are really nice as well. I'd say this is a medium break. It's good enough for MJ. So looking left now, at prior price action, which is always the most important part of every trade. Why do I see this as something more than just a range? Well, first of all, I'm thinking about liquidity areas. So if you look here and here, we've got these two kind of major lows, and I would argue that price has broken into this level with this V here, and the V alone makes the trade very high probability, but the fact that we're dipping into these liquidity areas at the same time really makes the trade even more high probability. And we've followed up the V with a range, and we've got the continuation of the second leg. So we haven't just got the V and the range here, we've actually got confirmation of the second leg. Like, we've got this move, which is kind of the last step in giving us a really good hint that price is going to start trending. So normally, you know, I'm just looking for a V in a range and I'm kind of anticipating this move and a trend. But the fact that we've got this move, it really shows me that we're probably going to start trending from here. So all of these elements, I think I said at the beginning, I gave this trade a 9 out of 10. It happened on a Thursday around 5 p.m. I think it tagged me in straight away. No, it didn't. So there's another element to this trade. I think maybe a couple of people would have removed the order after this candle. Maybe showing a bit of concern about this wick. For me, that's way too picky. This wick is not enough of a reason to write off the entire trade. It's also on a JPY pair where we have really huge wicks literally everywhere. So for me, this wick is small, medium. It's not really a concern. So I left my order on. And I've put my order in the wrong place here. It's actually 1 pip above, so it's at 6.7. So I think this candle tagged me in. If it didn't, I was definitely tagged in on the following candle. So that's not too important. And yeah, so I was tagged in. This is around 8 p.m. now. And unfortunately, it just carried on trickling down and took me out. So this is completely fine. Obviously, we are breaking above a range. So in this case, it didn't work out. But I would say on a larger sample size, these trades will make profit more than they lose. So that's the first trade, and it was on NJ. We'll have a look at the next trade now. So the next trade I took was actually on the same day. It was just a few hours after I was tagged into the NJ continuation, and it was a flag on EJ. So there is some pair correlation going on here, and you can see that reflected in price action where we've kind of got the range. We've got a kind of a V, not too much of a V, honestly. This is not as clean as the one on NJ. We've got the V, we've got the range, and we've got a much nicer impulse in this pair. The flag formation itself is great. The flag, yeah, it's fantastic. The only concern in my opinion is maybe there's a medium wick, but again, not being too picky because this is a JPY pair, medium wicks are acceptable. And this was just after spread hours, so I didn't enter on this candle, I entered on the open of this 11 p.m. candle, because that's just after spreads have calmed down. Now, I wouldn't be taking this trade if we were just, actually no, I would be taking this trade if we're just coming from a range, because the impulse is so good. But there's actually something else which makes this trade even more high probability, and I think I might have ended up giving this a 10. It may be a 9.5 to be honest, because it's not a perfect 10 out of 10 trade, you know. But when you zoom out, you'll see that we're actually in this really large uptrend on EJ. So the fact that we got this this flag as a buy setup in this large EJ uptrend really made the setup way more high probability. Now, I mentioned on NJ I used a 12 pip stop loss, which is what I normally like to use. That's the optimal stop loss in my backtesting data. On EJ, the optimal stop loss in my backtesting data is 10 pips. In this case, 10 pips looks like this, so just way too small, and I wasn't really comfortable with that. So I did end up using a 20 pip stop loss on this trade. So it's also prime time to be getting involved. Just after spread hours is near the opening of the Asian session, so quite often you get some volatility around 1 a.m. In this case, that volatility is exactly what tagged me out. You can see this happening at 1 a.m. So yeah, really nice trade. I think we did, well, of course, we did end up continuing the uptrend on the larger scale, but it did do a deeper pullback to kind of these levels. This is where we rejected off of. So a combo would have worked out if you know the combo entry. In this case, the flag didn't quite work out for me, but that's fine. I really like this trade, and I know that over a large sample size, they're very, very profitable. So that was the second trade of the month, both happening on July 3rd. Let's take a look at the third trade, which is my favorite. Okay, so the third and final trade that I took in July was this continuation short on EJ. So EJ again. I think we've actually been getting a lot of trades on EJ, which is quite interesting because it's one of the pairs I've been thinking about removing, because if you look at the backtesting data, quite often it's kind of like this, which I'm not a big fan of, because you're relying on these big trades to kind of make up all the profit, whereas I prefer my EU equity curve, which is way smoother, whereas yeah, EJ is kind of moves like this, where you get the occasional 15% winner, and then it's just break-even dance, which isn't great for prop firms because you really need a smooth equity curve, get lots of payouts. I've spoken about this so many times, I'm sorry. So yeah, EJ, as I mentioned, we've been in this really huge kind of uptrend. And eventually this has got to end, right? So even if you don't get a reversal, if you do get a reversal, you're very lucky, because this would be a mega trade if you manage to get on the reversal at this huge uptrend. But quite often all you need in these big moves is just to get involved in a little pullback. You know, on the higher time frame, a little pullback down back to like this high, say over here, that's a nice little 4% trade, which is all you need, you know. We're not trying to necessarily predict the direction over the course of like days and days and days. We just need to predict the direction for like the next 12 hours a lot of the time with our strategy. So what makes me take a trade short here when I mentioned we've been on this huge uptrend? Well, I started to see the uptrend struggling, and in this price action, I would say that we're actually forming more of an ascending channel rather than a trend, at least here. In prior price action, we're definitely trending. So let's take a closer look at this ascending channel to see what exactly is showing us weakness, because there's a lot of little signs in here. I'll zoom in and we'll have a proper close look. So first of all, we've got these candles all barely breaking the higher. So we've got wick, 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 just barely breaking higher. So on the lower time frame, we've got an ascending there. Then we've got this candle down, which shows a shift in momentum to the downside. So that shows a lot of bearish strength as well. And then we broke above this high here with this candle. And what happened? We immediately rejected. We just barely broke above it, and then we rejected immediately. So this is another sign that we're showing weakness. Now, this is the one sign of strength in this move. It's this candle up. Obviously, we're not going to get 100% signs that were bearish and showing weakness. It is going to be like maybe 8 things showing us bearish momentum and maybe 1 or 2 showing us bullish momentum. So obviously the markets are not perfect. So this shows us bullish momentum. But what happens after this move? Well, we get a large wick and a retrace. We break the high, we get some more wicks and a retrace. We break the high with a large wick and we retrace. We break the high just by like half a pip and we retrace. And then we break the high again. Oh, a solid close. What's going to happen? We retrace. Will we continue? No, we get a large wick and then we just go flat. But not breaking higher, just wick, 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 wick. Just completely rejecting. So as you can see, based on this, lots and lots of price action showing us weakness to the upside. But we need to see some kind of confirmation, and that's what we got when we broke this low here. So we got this big move down. Obviously, a lot of this happened within the range. I know that a few people may not have taken this trade just based on how we broke these lows. As I mentioned, when you have wicks barely breaking higher, it's the same when you have wicks barely breaking lower. This does somewhat show some weakness. But what's important is what you see happen after that. So we've got this big move down, we're breaking out of a channel. This is a good sign, but we're not getting a really convincing break. So what happens next is important. What happens after this slowdown? Well, we get this pullback candle, but does it show any strength to the upside? None whatsoever, no strength whatsoever. We have this tiny pullback candle with, and we actually have 2 double wick to the upside, so showing further weakness to the upside. Now, this alone, if I take it back, this isn't enough to take any trades. You need at least some kind of confirmation, or in this case, a double confirmation. Because we got this break, the first confirmation that we're kind of seeing strength, and this definitely confirms it. So this candle is what really sold me on this trade. Considering everything, prior price action is ascending, we've got an established trend out of this ascending, and we've closed with a solid close, which is so rare on the JPY pairs. You don't really see that very often. So I set my order and I gave this trade a 10 out of 10. And we were tagged in straight away. We trickled down and I was able to reduce my risk to around here. At this point, we were running at around 1.5% profit. I did use a 20 pip stop loss on this pair because 10 pips just look tiny again. Now, if you recall in our 5ers challenge, we actually only really need a couple of profitable trading days. But with the last few trades, I've actually come back under the profit target. So although I probably should have closed this out at 1% profit so that we get a profitable trading day, I actually ended up deciding to hold this trade because I thought maybe we can get a profitable trading day and get above the profit target. I was really confident in this trade, and I was thinking, you know, if I can close this out at 2 or 3%, we'll be above the profit target. We'll have 4 out of 5 of the profitable trading days, and we'll have a buffer to take a couple of trades and get the last profitable trading day. So that was my logic in holding this trade rather than closing it out at 1%, as I said I was planning on doing. Obviously, the plan changed when I got under the profit target and had a couple of losing trades. So this candles came super close. This was during just before spread hours as well. So that candle came really close to tagging us out, but we ended up sticking in it for a while longer. So we broke the low again. This was 1 a.m. Asian market open volatility again. You always see that around 1 a.m. in the UK, at least in the summer time zone. So I got to reduce my risk again. Now I'm actually slightly above break even, which is fantastic. And I think, did this trade continue any further? Unfortunately not, no. So I was tagged out for break even here. But at one point we were running around 2% profit, which was really nice, because I think after the last 2% losses, I think we were nearly back at the profit target. But yeah, I think this trade, we ended up ranging around a bit and then continuing a bit more to the downside. But as I mentioned, we were kind of just aiming for this, you know, maybe a 3% trade, a 4% trade, expecting this smaller pullback on the larger ascending channel. So that's exactly what we got. We got the smaller pullback, and now we're continuing to the upside. So it was really interesting to see that play out. So that was the 3rd trade of the month. Let's take a look at the 5ers dashboard to see how we're getting along. Just before we get into the 5ers dashboard, actually, I've just remembered there was actually a trade that I missed on AU, which ended up being a 5% winner, which is just absolutely typical. But unfortunately, it is the nature of this trading strategy. It's quite a low win rate trading strategy, which means that if you miss the winning trades, you're going to have to eat a couple more weeks at break even or in drawdown. So this trade actually happened around last week, so towards the end of July, unlike the other three, which were all at the beginning of July, and it was this flag on AU. Now, a lot of people, I think they wouldn't be a huge fan of this trade just because we're breaking above this range here. But for me, I think this trade is very high probability, and I'll tell you why. So first of all, prior price action, we've got this big descending channel. Now, how do we close out that descending channel? Well, we have this larger scale V. Obviously, this isn't a V on the 1 hour time frame, but if I go to the 4 hour time frame, you can see this V is very clearly defined. Not to mention that this V is breaking into a higher time frame liquidity area. So if I drop back to the 1 hour, we can see this a bit more clearly. So we've got this V, this descending into a V, into a liquidity area. So basically, to summarize, prior price action is great, okay? Prior price action is very good. We've got the V, we've got the range, we've got the descending, we've got the liquidity area. There's not a lot more you can ask for. So we've got this impulse above this range, and we only broke the high with 2 candles, but for me, that is enough. If we broke the high with 1 candle and got the flag, I would not ever be taking that because we're just breaking the high and retracing. Whereas in this case, we broke the high and continued. So that makes the trade a lot. That basically shows me that we're gonna continue to the upside, because obviously if we just retraced here, particularly above this shift in momentum down and this double top, it's literally a liquidity sweep, and I'd be looking for shorts a lot of the time. But in this case, we didn't break the high, we continued. So the liquidity sweep failing basically makes this extra high probability for me. The flag itself, I mean, you can't complain. There's not a lot wrong with it. You'd be entering just after spread hours, which, as I've mentioned, is prime time to be getting involved with these Asian pairs. And yeah, this trade, 10 pip stop loss, unusually actually looks quite large, which we haven't seen for a long time. And for me, that's quite a good sign that the markets are kind of settling down a little bit. And yeah, this trade, it trended correctively. It just trickled all the way up. And it would have been around a 5% winner, I think. So 5-6% winner. So yeah, real shame I missed that trade. I don't really have an excuse for why I missed it. Obviously, I've got a newborn at the moment, so I can't beat myself up too much for missing trades. But yeah, let's actually take a look at the Fivers dashboard now. Okay, we're in the Fivers dashboard now. I did actually get a little bit mixed up. We have 1 out of 3 profitable trading days, not 3 out of 5. So I think I'm getting mixed up with another prop firm challenge there. But yeah, you can see that we're still way up. We're still in profit on the account, which is fantastic. We're up $6,500, and we're basically just waiting for our next winning trade, which is the nature of my trading strategy. It's not ideal for prop firms, but on a yearly sample size, it is very, very profitable. I think the win rate is about 30% right now, which is around what I'd expect. But the profit, compared my average profit compared to my average loss, there's a huge difference. You can see my best profit is nearly $9,000, and my worst loss is just over $1,000, which is great. I'm risking 1% per trade, so that shows that's reflected in my averages. So my average profit is $2,300, and my average loss is only $500, which is 0.5%, which is very, very good. I'm very happy with that. My profit factor is 2.2, so that's actually very good. That's excellent. I'm very happy with a profit factor of 2. So you can see the trades I just described reflected here. Obviously, I reduced the risk to 0.5% while I'm just trying to get the profitable trading days, just trying to get back to the profit target. So these losses are actually relatively small right now, -570. This loss was a little bit bigger, probably because it's NJ, exotic pair, probably got hit with slippage a little bit. And this trade, what happened here? It looks like I got hit with the swap fees pretty hard. It must have been on a Wednesday with triple swaps. -$150. I guess that's because EJ, everyone's in carrying trades in buys, so everyone's taking the positive swaps. Not many people doing shorts. So yeah, it looks like I got hit pretty hard there with the swaps, which is a shame. But yeah, otherwise that would have been a relatively small loss. So yeah, we're doing pretty well. You can see just recently at the end of July, I took I took a little trade there to make up the minimum trading days so that we still have plenty of time. And yeah, just following the plan. Hopefully we have another couple of trades like this coming up. And yeah, I just need to make sure that I don't miss any trades like the one I mentioned on AU. So there we go. Thank you guys so much for watching to the end of this video. I think I probably explained the trades for a little bit too long, so this might be a longer video, and if you've stuck around to the end, it really means a lot. I really appreciate it. Thank you so much for following along. If you aren't subscribed already, make sure to hit the subscribe button down below. It really helps the channel. We're nearly at 5,000 subscribers, so that'll be really awesome to hit before the end of the year. Make sure to leave a like as well. Comment down below if you have any thoughts you'd like to share with me, and thank you so much for watching. I'll see you in the next video.